Hello, good morning. Welcome to another session. In this video, I will be taking you through my thought process on what my expectations are on the XAUUSD for this week. And in fact, this is going to be a follow up detail to my previous analysis on the XAUUSD, where we were able to take advantage of some trading opportunity despite the fact that price had been caught within a choppy situation around the 19,949 level and the 1,922 area. For the sake of the follow up, I would like us to see as I have some highlights of how last week went by. And in that regard, we had a situation at the beginning of the week where we noticed that we had a consolidation phase around the 1930 and the 1924. And we were actually looking out for the breakdown of the 1924 to join a decline, and that was exactly what happened during the early hours of the week. So we saw price come back to do a retest of structure. Then the trend continuation continued, which triggered another position, and we had two positions running. And as soon as price got into the 1917 level, a level which shares a beautiful confluence with that bullish trend line, we saw some bullish momentum come in, taking us out of all the sell positions we had there. Though we had some level of profit, some profits there, though it wasn't that significant. And we actually anticipated that if price action breaks out of the 1930, we are going to be joining a rally to the upside. Within 12, 14 hours, we were already in profit with two positions running as price action broke out the 1930, the 1935, and then as soon as price tested the 1940 level, we started seeing some selling pressure and we decided to sell below the 1935 level. That is, price would have breaking down that bullish trend line. We got a position triggered around the 1935 level. We rode the move all the way down, added another position at the breakdown of the 1930 with the hopes that we want to be adding another position. But what happened was this huge engulfing candle, which took us out of all our sell position with some small profits at a time. Then we continue to look out for more selling pressure if price continue to respect that bearish trend line, and if it breaks out of that structure, we shall be looking out for buying opportunities. And what happened was quite interesting. We saw the breakout of the 1935, giving us an opportunity to join that rally. Then price continued. Then we had a little consolidation phase before it broke down, taking us out of that position. So what this simply tells us is that the 1940 level has been a major selling niche for participants in this market. And we shall be going into the details on that one when I take you through my thought process for this week. Then we also had some other buy pressure around the 1930. Then we joined this bullish momentum and rolled the move all the way up. We had a breakout of the 1935, welcoming additional position. Then we saw the 1940 again with the hopes that we might likely see a breakout of that structure. And in fact, we had a little breakout. Price position was triggered. Then what happened? As soon as price got into the 1949, we saw some selling pressure. Price actually evolved into a reversal pattern, and then we looked out for selling opportunities below the 1940. And prior to the macroeconomic event for the 26th, and that was the gross domestic product, durable goods order, and the non-defense capital goods order, we identified a simple setup which we said we shall be using to guide our trading activity against that macroeconomic event. And what we saw here was a beautiful channel around the $1,937.50 level and the 1,935. And we looked out for a breakout or breakdown to join that rally or decline. And we saw the breakdown of the 1935, which triggered another sell position here. And we rode the move all the way down, which gave us about over a thousand pips thereabout before this bullish momentum came in here. I wouldn't want to bore you with all these analysis but I just want to give you a preview into how we took advantage of this trading opportunity. But if you really want to have a review of how we took advantage of all of the opportunities we had last week, I will be dropping the link to these commentaries in the comment section of this current video. So with that being said, let's dive into the current structure where I want to be sharing with you what my expectations are going into the new week. So since the beginning of this year, looking at the daily time frame, you would observe that price action has been on a bullish momentum as it continues to find higher highs and higher lows. We had a successful breakout of the 1820 level at the beginning of the year. We saw breakouts of structures like the 1860, breakout of the 1900. And one interesting thing about this current structure is that in the last 2 weeks, price action has actually been consolidating between this 1940 level and the $1,900 level area here, giving us a beautiful channel that reveals the level of indecision in this market at this particular point in time. And in addition to this channel here is this trend line which I was able to use to identify this bullish momentum. As you can see, this trend line has been a major determinant of price action. Since the breakout of this trend line here on the 11th of this month, we noticed that price action has been bullish as we can see price continue to trade above that level. Now that we are going into the new week, there is a tendency that the current structure here would likely um, transition into a bullish trend continuation pattern. And the reason why I have said this is this: if we take into consideration the bullish momentum that started this week, as you can see here, after the breakout of the $1,820 level, we saw that price action was caught within a consolidation phase, which looks more like a rising wedge, and you could call it a bullish rectangular pattern. And if we have this kind of setup, what we are expecting is a breakout of the resistance point here to give us a signal of where price will likely be going. And during the course of last week's trading session, rather, we saw a little breakout of the 1940 level to give us a little sign that the tendency of a bullish momentum coming in here is more likely than selling opportunities. And if you look at the structure here, you can see that throughout the course of last week's trading session, though we had some selling moment, we can see that price action was tending towards the resistance level. So they have been knocking through the 1940 multiple times. In fact, in the last 2 weeks now, and at one point that ceiling is going to break. And we actually saw some insight into that possibility here on Wednesday, as we saw that breakout of that 1940 to signify that bullish momentum is likely coming in. So I also had this structure here at around the 1922, which has also been a strong buying niche. As you can see, multiple rejection of this level, further emphasizing the strength of the buyers in this market. If I am going to be buying right now, I will be having my order right above the 1940 to join a rally to the upside. And if price breaks down this trend line, we might likely see a situation where price will be dropping further to the downside. I would like to show you some simple setup which I was able to identify on the 4 hours time frame, which I think will make things a little bit easier for us to make a decision, our own individual decision during the new week. But before I go into the details of that, I would like us to look at the economic calendar where there are a series of macroeconomic events that are coming in for this week, and definitely majority and participants in this market will be looking forward to this event to decide what the next line of action will be. And we shall be seeing the reflection of this anticipation on the chart as price action. Now, looking at the economic calendar here, we want to be focusing on events that will be affecting the US dollar. And the first one for the week comes in on Wednesday here, as we have the ADP employment change, the ISM manufacturing PMI, the Fed interest rate decision, monetary policy statement, and the FOMC press conference. It's quite a heavy Wednesday for us there. Then we also have on Friday the almighty non-farm payroll and the highest time services PMI for this week. So this week is jam-packed with a lot of macroeconomic event, and there is a likelihood that this event is going to be bringing liquidity into the market, and as a result of this, we might likely be seeing some level of volatility in the market in either way. Now, the next question we are going to be asking now is how are we going to be positioning ourselves in such a way that we can catch either of these moves when they finally happen? So the answer to that, I was able to identify some simple setups on the 4 hours time frame, which I would love to share with you in a moment. And right now we are on the 4 hours time frame, and this is what I was able to identify here. So I will just zoom into the current structure here using this bullish trend line, which has been guiding bullish momentum since the month of December. And if you look at what we have here, after connecting the series of higher lows here, I had this bullish trend line. Sorry, don't mind the irregularity of my light here. I had this bullish trend line which has been guiding bullish momentum here. So I will be calling this one a temporary bullish trend line because I have a major one here which has been guiding bullish momentum for like 3 to 4 months now. And that is this major one, the thick one on your screen. That's the major one. Then we had a deviation to that major one here in the month of December as we had this price continue to find new highs and new lows. Now, if we look at what happened here throughout last week trading session, we can see that there has been a consolidation phase which I laid emphasis on the daily time frame between the 1949 and the $1,920 level. And I told you that despite the fact that we have that breakout on the 1940 on our daily time frame, that there is a tendency that price will likely continue to the upside. And if we look at what we have here in the last week, we saw that the 1920 level here has been a major buying niche. And as a result of this, I identified that level as a demand zone. So going into the new week with this current structure here and considering the bullish trend line we have here, I want to see a breakout of the 1932 level, a level which has, if you look closely, you can see it has a traces of selling strength at one point in time during the course of last week trading session, as you can see here. So I want to see price action break out of this structure and if possible do some buying pressure around this area, my lower time frame, then I could actually join a rally to the upside. And if a further breakout of the 1949 level happens, I will be adding more position to my existing trade. So I won't be thinking of selling the XAUUSD unless we have a breakdown of this demand zone, that is price action takes out all the buy position here by breaking down the 1920 and the demand zone here, which also shares a very beautiful confluence with that bullish trend line you can see on my screen. And if that happens, I will continue to look out for selling pressure below this level to join or add more position to my existing trade. So at this point, I'll be pausing the video here, but be rest assured that I will be jumping right in the comment section of this video to give you an update of all what my expectation is going to be like at the beginning of the week after monitoring how participants in the market will be reacting to this current structure. I hope this video has been of immense help in making your individual decision on the XAUUSD, though it's quite long. I hope to do something shorter next time. Kindly support this project by clicking the like button. You might also want to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you don't miss out on the regular updates I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday. Do have a wonderful evening. Bye bye.